Okay, when it comes to forex trading, there are two types of analysis that you need to take note of. Number one is technical analysis, and number two is fundamental analysis. So let's get started on the section on technical analysis first. Now, what is technical analysis? So a lot of technical analysts, they trade based on the belief that the past will repeat itself. Since the price movements, they are driven by human emotions. Now, a lot of people will say, oh, the price is actually driven by the fundamental factors, economical factors, political factors, but it is how the traders and investors perceive this news that led to whether the market will go bullish or bearish. So in a way, it is still driven by human emotions based on how they respond to the news, whether they are fearful about it or whether they are excited about it, and that hence drives the market. And it is based on the assumption that human emotions don't change. Now, although the past 20 to 30 years, the economic factors have changed, the political aspects have changed, but human emotions, fear and greed are still the same. We still feel fearful when everybody is selling. We still feel greedy when everybody else is buying. So that's why people stick to technical analysis. Now, technical analysis allow you to determine the probability of future price movement based on past price movements. And again, this goes back to, we are assuming that the past will repeat itself. Now, the reason why I mentioned probability, now take note of this keyword, is because we don't use technical analysis to predict where the price would be going, because none of us can predict where the price will be going. We can do all our analysis and the price still can go in the other direction. The fundamental factors can all tell you that it is a good time to sell, and yet sometimes you will see that the price would shoot all the way up. So technical analysis helps us reduce the probability of getting the trades that would retrace, or increase the probability for us to go into trades that are going to go to the direction that we want it to go. And as technical traders, we all believe that the market variables would have been already reflected in the price. Now, what are the market variables? The political factors, economic factors, and even the psychological factors of the traders, investors are already factored into the price. Again, this is one of the other assumptions. And just like any other craft in life, okay, you will need time and practice to master it. We don't just learn a new system 2 days and then become a millionaire 3 to 4 months down the road. All the professional traders take years before they become profitable. So that's why I always encourage beginners to never believe in the fact that forex trading is a get-rich-quick scheme. Because this is just like any other career out there, just like any business. The doctors, the dentists, the engineers, they all go to college for at least 3 to 4 years. Then they need to come out, get some training, internship, before they can become a master in their craft. Same for trading, okay? Treat it just like any other career. Because a lot of successful traders and investors, you realize that they will always preach to keep your system as simple as possible, to keep your strategy as straightforward as possible. Because here's the common mistake that a lot of beginners make, is that they like to trade with this type of chart. We have this thinking that the more indicators we stuff into our chart, the more profitable we will become. The more cluttered, complicated our system is, the more profitable we will become. What I realized is actually the other way around. The more simple your system is, the more straightforward it is, the more profitable you would become. Because here's the thing, when you have a chart that looks just like this, when you make a wrong trade, you wouldn't know why did you make that mistake. Same thing, when you make a right trade, you wouldn't know why were you correct to begin with. Having way too many signals would make you really confused, because one indicator would tell you that now is the time to buy. Then another indicator would come and tell you it's a good time to sell. When you have too many conflicting messages in your trading platform, it is just going to confuse you and stop you from trading profitably. Okay, so as a beginner, never ever clutter your chart with multiple trend lines, support resistance, with multiple indicators. In trading, sometimes less is more.